Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a report from Windstream Parent Incorporated, and it's a bit like watching two companies try to merge into one without creating too much turbulence. Let's see if they manage a smooth landing or if it's going to be a bumpy ride. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we can discuss this further. Windstream Parent filed what's called an 8K form, which is basically a company's way of saying, hey, something important happened and we need to tell everyone right away. In this case, it's all about a merger, that is a big business deal. So what's the big news? Well, Windstream Holdings 2 LLC, that's one company, is trying to merge with Unity Group Incorporated, which is another company. They've got a deal called the merger agreement. It's like a contract that says how they're going to become one. Think of it as two puzzle pieces trying to fit together, but instead of puzzle pieces, it's entire companies. After a bit of corporate maneuvering, Windstream and Unity will, after a merger, become part of Windstream Parent Incorporated. And get this, Windstream Parent is planning to change its name to Unity Group Incorporated, so it's like a corporate identity swap. Now, why are they filing this report? Because they want to share some important financial information. Specifically, they're giving us the financial statements of Windstream, like their report card showing how well they're doing as of March 31st, 2025 and December 31st, 2024. We also get a look at how Windstream's management sees things, like their thoughts on their financial situation and how they're doing overall for the 3 months that ended in March 2025 and 2024. This information is like an update. It adds to what they've already told us in other documents filed with the Securities and Exchange Commission. That's the SEC, like their prospectus, which is like an official sales pitch, and their registration statement, which is like their application to become a public company. If there are any differences between this new report and the old documents, this new report is the one that's correct. Now, let's dive into the numbers. We'll start by scrolling to Exhibit 99.1, where we find the financial statements of Windstream Holdings 2 LLC. First up, accounts receivable net. That is the amount of money that is owed to Windstream by its customers, minus any amounts that they don't expect to collect. As of March 31, 2023, $1 million, while at the end of 2024, it was approximately $353 million. So it looks like they're collecting a bit faster. Property, plant, and equipment net comes up next. This is the value of all the tangible assets that Windstream uses to operate its business, like buildings, machinery, and vehicles minus any depreciation or wear and tear. At the end of March 2025, it was around $5.2 billion, which is nearly the same as December 31, 2024. No real change here. And finally, their total assets, Windstream's total assets, were about $7.9 billion at the end of March 2025. At the end of last year, they were about $8 billion, which means they lost about $100 million in the first 3 months of the year. That could be due to a number of reasons, such as lost sales, investments that went south, or increased expenses. Now let's check the balance sheet liabilities. Accounts payable represents the amounts Windstream owes to its suppliers and vendors for goods and services purchased on credit. As of March 31, 2025, Windstream had approximately $158 million in accounts payable compared to around $66 million at the end of 2024. This indicates an increase of approximately $12 million. This could mean the company has taken on more short-term debt or that their payments are delayed. Accrued interest represents the amount of interest expense that Windstream has incurred but not yet paid as of the balance sheet date. As of March 31, 2025, this amounted to approximately $27 million at the end of 2024. So it looks like they paid off some of their debts. Their total liabilities amount to about $4.6 billion at the end of March, down about $100 million from the end of the prior year. Now let's look at the income statement. Their total revenues for the 3 months ended March 31, 2025 was about $1 billion, down from $1.03 billion the prior year. That's a 3% drop in revenue. Cost of services shows how much Windstream spent directly providing services to its customers. In the first 3 months of 2025, it cost about $450 million compared to about $465 million in the same period last year. So they spent a little less to keep the lights on, which is good. Net income or loss is the big one, as it shows whether Windstream made money or lost money overall. In the first 3 months of 2025, they lost about $19 million compared to making about $10 million in the first 3 months of 2024. That's a $29 million in the first 3 months of 2024. That's a $29 million difference. Moving on to Exhibit 99.2, we find the management's discussion and analysis of financial condition and results of operations. The report starts by describing the results of operations. This is where the company goes into a bit more detail about the numbers and explains what's been going on. They note the drop in revenue. Operating expenses covers all the costs Windstream incurs to run its business, excluding the direct costs of providing services. The report notes that they are down slightly from the prior year. Then they move on to liquidity and capital resources, which covers Windstream's ability to meet its financial obligations and fund its operations. They mentioned that the business combination with Unitai is going to be a big change. There's also a warning that forward-looking statements aren't guaranteed, and the future might not look exactly as they expect. Lastly, the company provides resources for investors seeking additional information on the merger and the companies involved. Now let's step back and look at the big picture. Based on these numbers, Windstream isn't in the best shape right now. While the merger with Uniti could provide some new opportunities, there are also some risks involved, such as uncertainty about whether the merger will actually happen and potential difficulties in combining the two companies. It's also worth noting that the telecommunications industry is constantly changing, with new technologies and competitors emerging all the time. Windstream will need to be innovative and adaptable to stay ahead of the curve. Overall, this merger is a high-stakes gamble that could either revitalize Windstream or lead to further challenges. Keep an eye on how this merger unfolds and what steps management take to stabilize the finances. Alright, that's our breakdown of Windstream's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.